Hello, today is Sunday, the 31st of July 2011, as we are now moving into the month of August. I'd like to thank everybody for making the votes on the blog for the different things that you would like to see because it really does make it a lot easier to decide some stuff that I really need to do or some stuff that I can pretty much throw away. Therefore, in this video, we're going to talk about gold, so that one will be scratched off. And we did the gold to silver ratio yesterday. The metal to stocks ratio, that will be coming later this week. Only 3 votes on the S&P 500. I got to discredit that. Same with bonds, only 2. And I was surprised not many people wanted to get much on the crude oil. Now, inflation adjusted silver was done yesterday, so that is taken off the list, which means inflation adjusted gold. Try to get that later in the week. Physical trading strategies. I still got some work to do on that one, but that's a very important issue. The dollar index, I'll be doing that today. Dollar or gold and silver priced in euro, again, another one. The direction from the 50-day high and low, I can do that very quick, so I'll do that right now. I wasn't planning on it. It's on the blog, but I'm only going to take about 30 seconds on that. And 4 people even for this wacky one. And I did this only to compare if maybe, just maybe something else got less votes, and that was the case. I'll get into that one again later on. But we'll now start off quickly within the direction from the 50-day. When we look at this chart, it shows the direction from where the silver price is, from the highest point silver's been over the last 50 days and the lowest point. When the orange line is above the blue line, then that can give you some nice objectives for the long side, which is what is transpiring now. If you manage to get in already, then it looks as if that you could be getting on the early end. Now, this could be that of a trap. I would be looking, as I see the chart now, for a move down to maybe into here, and then as momentum is going higher as a possibility. But how you want to use this, it's totally up to you. I didn't want to talk too much about this. We'll now move on to the dollar index. And we'll take a look at this on multiple time frames, going from the longest point, which is the yearly chart, all the way down to the daily. And the big level on here is this 80 mark, because this 80 level was support, 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 and every other time before it went from 80, it got up to about 160 in here. Then it got up to about 120, and then it got up to about 90. And now it's looking as if it wants to have a significant break lower to the downside to levels not seen. And the first objective you would think would be close to 60. Now we'll move this onto the quarterly chart with each candle representing 3 months rather than a year. And within these charts, it has the 18 period average. It's a front weighted average. The Fibonacci from the last 67 periods, as well as an upper band and a lower band that is very similar to that of a Bollinger Band. And since the market broke down back in 2002, it had a decent sized move going from 120, had a little bit of support in here, but not really all that much, and found some resistance and kept the downtrend alive as it came up towards here. And it's been trying to stabilize and reverse the trend, but it really hasn't been all that successful. In fact, we can see here that on the last 4 candles, or the last year, manages to come up, and now it's moving the momentum down towards the downside, looking for resistance here at the 18 period average of lows. It's already broken through the 2009 lows, or this low in here. This low down here is 70.7, and it does seem as if that level just may have a little bit of a bounce. It's very difficult to state, but when we're in a situation when the currencies are really collapsing, if one currency collapses harder than the other, then obviously one of them is going to be doing very well. It's still a difficult measure to see how the currency actually is. And that's going to be the reason why we'll take a look at gold afterwards, but we'll finish this off. We got the monthly term time frame below the average, above the average, below, above, and now it's below. The way that this pattern is going, which is an indecisive pattern, then this is the area where it would eventually move towards the upside and get above this band. However, we're still at the point within the indecision. If we make the decision now, then this is where it would happen after having several hits at this level and really more of a descending triangle, or at least you have a horizontal line here that would be set at this 7270 level. And then you got the resistance at the 18 period average of lows, which is currently now set at 7571. Therefore, it's needing to break one direction or the other. The quarterly chart isn't looking good, nor is the yearly chart. And now we look here at the weekly chart, and we're seeing some more of these bearish signs. When you go below this level, you consolidate, try to get above, but no, and then you have a significant break lower. And that's what happens when you are in a downtrend. You stabilize at an average like this, but you're not able to bring it higher, and then eventually you break down, which you can see happen in here. And then it goes from 77 down to 72. Then it comes back up, and it's back in this range again, and it's now looking as if maybe the same thing is occurring. This candle in here breaks below it, and now it comes up to this level, finds resistance in here, and if it does manage to break through again within this low, I would really be expecting for that test down towards here at around 72, and then below that, of course, you got the 70 level. We'll finish it off within the daily chart, and we're now at the situation where we have this debt ceiling deadline, and that's most certainly got a good chance of not only increasing volatility, but rapidly increasing it. We have another chart that's looking to find resistance at the 18 period average of closes. Therefore, once again, not showing any strength whatsoever. As we look at this, we say, you know what, this really doesn't say too much. If all currencies are dying at the same time, which seems logical that will be the case because we're now in a day and age where we are globally connected very well through digital technology, that they'll all go together, because before one country may have had no idea that one country was collapsing. That's not the case anymore. And you could see a situation where just maybe the United States loses half their value in a short period of time, and other countries lose two-thirds. Now the index will be going higher because it's not collapsing as hard. That's why I don't like this overall as an index. Would rather use gold. And that's why we'll now segue into gold on multiple time frames. We'll start with the daily and work all the way up to the yearly term time frame using the exact same format within the charts. Therefore, when we look at this on the daily chart, at the start of this period, having a nice move using this average as support, and it tried to break down not only in here, but in here, and it wasn't able to do so. Since then, it had the breakout of this 18 average in here. It's coming close to finding support at this level, but it's not, which means that the buyers are not wanting this market to go down too much lower. Maybe they feel that they're not going to be able to get back in. Maybe they cover their shorts much earlier than they normally would because of fear or for whatever reason. But when you look at this chart, we're making the higher lows. It's making the higher highs, and this band, which has been calculated based on the volatility of markets within the 18 period average, has not been touched either on the upside or the downside since the 50 periods within this chart has begun. And to me, this shows that there hasn't been any major wild moves, any major volatility within the market. That can come at any time. And obviously, with the whole debt ceiling issue, it wouldn't be a surprise if it happens this week. But right now, the market is in a nice uptrend, making new nominal highs. Let's move this on to the weekly. And there's nothing bullish or bearish, about this chart because The only times it has been below this 18 average of lows was back in here, and that really wasn't even for that long of a time frame. It came down to this area a few weeks ago or about a month ago. Since then, it has broke by this level. It didn't find that much resistance at the previous all-time high, and it is really getting going. And a lot of times when you break free from these averages, you can go many periods before touching them again, especially when you burst off after you go through it, which is really what's going on in here. Now, that doesn't mean that we're guaranteed or it's even a major, massive chance that we're going to go up to 17, 1800 without much of a correction, but it very easily still can at this point. We'll now switch this up to the or off to the monthly time frame. And well, since the big fall in '08, when the market came below $700 per ounce, it has been staying in a very consistent uptrend. You put these trend lines in, and it's just a perfect upward trend that it's in. 3 steps up, 1 step back, something in that nature again. And once you end up breaking above here, for the most part, then you usually have a decent amount of gain. So I would be expecting at least this to get close to 1700 before it has any before it breaks down too much. But overall, when you're seeing moves like this, anytime you do get selling, you got to give the benefit of the doubt on a aggressive level towards the buyers because it has been holding very well so far. There's no fundamental reason for anything priced in dollars to really get crushed towards the downside at this point, unless it's an asset class that deserves to be. So right now, that's not the case within gold. On the quarterly time frame, it shows the picture very clear since it managed to break away from this downtrend at the start of the decade. Since it's broken free, roughly around 2002, 2003, the only time it has spent anything below the 18 period average of highs, well, you had a brief period here in 2008. But other than that, it's just slowly but surely going higher. There really isn't any large size candles as well. And that means we've only had a couple of tests on these upper bands. Right now, the upper band is set at 1855. A lot of leg room, of course. And if you look at the straight green candles in a row now, that's 3, 4, 5, 7, 9, 11, 12 in a row that we're working on. This one ends at the end of September. So it's in a nice hot streak, and this is due to the currency and its destruction. This is when the wake up call, for the most part, really began into play. It got above that significant 1,000 people were talking about for so long, and since that's been the case, it literally has not looked back. Finally, we'll take a look at this on the yearly chart. And what I find interesting about this is the upper band. The upper band currently now set at 1657. You can see, well, the price is above it. It's that's because the line is up here. Very it's difficult to put these straight lines in with the candles, but they still seem to work very well. But what's important to realize is this is 6 straight years that the market has been hugging this level. A lot of times you come up to this band and say, okay, it's got to go down. Once you go this bad, doesn't that mean you sell or short sell? Well, maybe the first time it gets there, yeah, but when it's been hitting it for 6 levels, I got to go to the school of thought. The more often resistance is tested, the more likely it is to be taken out. And it's been tested for quite some time. The size of the candles, well, they're not too big, and we can do that just by simply drawing a trend line back from the 1970s, because the rate of ascent was that direction. The rate of ascent today is this direction, which is less than what it was back in the 1970s. As far as the moves were concerned, as far as point A to point B, point A is 35 on this case, and point B is 800. We even say 40 to 800 just to make the numbers easy. That's about 20 times its value. Well, point A on this level starts down here at 250, and that brings you on a 20 times value going to, well, $5,000 per ounce. So the distance is not matched, the rate of ascent has nothing, and it's to me very useless to even consider calling this a top right now. There will come a time frame where that'll be the case. I just don't like your odds of winning if you do call this a top today. And thank you all for watching this. And remember, I don't know how much time we got left. I don't know exactly how volatile it will be, but I'm expecting it to be to one degree or another. The final note will be I believe that this whole debt ceiling fiasco going on right now is going to be one of two things. One, it's going to be news that will soon be forgotten, most likely because they do raise the debt ceiling, and that will be in the list of all many other ones like the Goldman Sachs civil lawsuit. That was the news. That was in the news for a few days, and well, then it was no longer in the news anymore. And then you had the Gulf oil spill, which was popular for quite some time, and then again, it stopped leaving the news. You have the flash crash in 2010 when the markets just caved in, but it was a fake move. Nothing much went on with that. Then earlier this year, we had the COMEX collapse of the silver, and that was earlier in like February or March or something. And well, nothing yet has happened there. So that could be the case again. And when I say nothing yet, meaning you'll have to wait a little bit. Now, the second thing is that this whole debt ceiling thing could be legit. It could be the next major stage towards the end of the currency collapse. But I think either way, that it does mean that the gold and silver prices are going higher because if they raise the debt ceiling, okay, maybe there'll be short-term selling because you'll be hearing stuff in the mainstream. Oh, we got things under control. That means gold and silver aren't as safe havens as they once were. Yet it's the exact reasons for what they're doing that people are getting into gold that has managed to have it have this increase that it has had. And then, of course, by not raising the debt ceiling, that quickens the collapse of the currency. And again, gold and silver, I'm happy to have. Thank you for watching and have yourself a great day. Bye bye.